right, guys, here we go again with another of our Evolution Consulting market update videos as they've come to be known. This one being recorded on the 6th of September, 2016. Just after market trading hours. It's about 5:30, and this is primarily done to remind everybody to take a look at our newest addition to the Evolution Consulting site, which is our May 1st through September 2nd 120-day trading record. We added that to the, for those of you that have seen it on our site, we added that to our original spreadsheet. I've been sharpening my Excel skills, so you guys have a nice spreadsheet to take a look at. So obviously we have a record that we can present to our clients as far as our U.S. domestic equity market trading picks go. And once again, we invite everybody, and you can take a look at it. We put it up in Google Docs form, which, by the way, guys, if you've never used Google Docs before, it is one of those services from Google that is, even I'll admit, is very cool. And with that in mind, you take a look at the proven forecast page. Just scroll down to the bottom of the home page, and there is a metal kind of plate there, and it looks like a one of our typical industrial design type graphics. But it's a you take a look at that to the bottom of the page, because we do that in chronological order, and you can take a look at our trading record. And if I had to describe our trading record in one word, okay, over the course of 240 days now, from January 1st to September 2nd, my word is just simply wow. Okay, normally I have something very clever and something very snarky to say, but when we did the calculations and we did the numbers, I was actually speaking with one of the clients of Evolution Consulting at the time that we were doing the calculations, and it was just like one right after another. I was looking at the numbers going, oh my God, how the hell did we do this? And suffice to say, as the chief systems designer, chief architect, or whatever my job title is, founder of Evolution Consulting, titles really were never that important to me. But the fact of the matter is, guys, wow is all I can say. I mean, the numbers don't lie. Retarded people do. Okay. The fact of the matter is, I mean, we saw some of the individual equity percentage numbers, and we were like, the hell did we do that? And then when we started doing the net numbers, the calculations, the aggregate numbers for our trading record, we were just like, well, shit, we did it. Right? So that being said, guys, I do invite everybody to, especially on behalf of the entire Evolution development team, like I said, we have all been talking back and forth, and we're just like, wow, we did it. And it's kind of one of those things. It's awe-inspiring is what it is, to know that we built a program that's been this accurate, and especially even on the intraday level, guys. I mean, we don't take into account any of the intraday stuff on the trading record. I mean, it would just be impossible to do. Listen, when we have a staff of like 100 and some people, I'm sure that's something that we can do. But for now, just to present the overall accuracy of the system, spreadsheet. All right, so a couple of things I want to go over here. If you take a look, and now this is using the buy and hold technique. First thing we're going to talk about is the buy and hold technique, okay? And that is, when we say buy and hold, we made annotations on the spreadsheet, but that is if you purchased from our recommended levels, or a standing order, if we put a buy stop in, or a buy limit order, or whatever the case may be, okay, we did take that into account. All right, but the numbers we're about to describe here are if you bought from our entry point recommendation and you held it from that entry point recommendation to 9/2, September 2nd, okay, and this is what you would have looked like. So we went 23 for 14, okay, 23 winners, 14 losses in terms of equity selection. Gives us about a 60%, 60.86%, win-loss ratio, which is, by our standards, not great. But there's a reason for that, okay? And the reason for that is very simple. We did include about a half a dozen trades that we've made as recently as, the most recent two switch and signal additions. And those are plays that haven't yet developed yet, and those are plays where the price action really hasn't yet started. And yes, of course, we could have made an annotation. We could have excluded those, whatever. But once again, we hold ourselves to a very high standard here. All right, so we're 60%, okay, on our win-loss ratio percentage numbers. 23 winners, 14 losers. Okay, for and that's counting from January 1st, okay, to current 9/2, and I don't blame, but the reason for that is just the timing. We got a little bit of a dip on oil. Some of our oil ETF picks went below our entry point, so Hey, it is what it is, right? That's what I call it, trading. But that being said, our average overall, now this is kind of a convoluted number, but if you actually bought every single equity when we recommended it at the level that we recommended it at from January 1st forward. Okay, now there's two that have a blue highlighted line there. Those were made when we absolutely first brought the Evolution 4.0 system online. That's when we took Looking Glass, haha, remember that, and we incorporated that into the Evolution 4.0 architecture. Okay, those were made in late 2015. We did still include those because they were made on the Evolution 4.0 system. Okay, technically we could exclude those because we could say they weren't made in 2016. All right, but taking everything into account, once again, we hold ourselves to a very high standard here. If you bought every single equity, every single recommendation, and you just held on to it from when we recommended it, January 1st forward, your average ROI or your ROI would be 24.97%. Okay, that's not bad. That's not bad for 240 days worth of trading. Okay, so you'd be up almost 25% on your money. That's not bad. All right, now taking into account just the winners. Okay, our average gain on a winning buy and hold trade, we're 48% even. All right. As far as losses go, we do talk about those two occasionally. Our average loss is 12.87. So our positive price action win ratio is 4-to-1 to the losses that we take. Again, that's a respectable number. And those that run money and manage money and are involved in top level or high level finance will understand the significance of those numbers. Those are very real, very sustainable numbers. So that being said, in terms of the top gain that we had, and I just noticed a misprint on our spreadsheet here. I'm going to have to go in and fix that. But our top realized gain so far, guys, obviously would be JNUG coming in. If you bought it when we recommended it and you held on to it, okay, until 9/2, you'd be looking at 266.55%. Yes, that's a real number. Okay, coming in second would be NUGT with 113.19%. There's a few others. GDXJ, who do we have here? We got 104% on this. Once again, if you bought and hold on, I think that's going to be USL. SLVP, you'd be up over 100% from when we recommended it. So in the realized gain department, guys, there's three members of what we've come to call the Triple Digit Club. Okay, so again, you're more than welcome to head on over to the website, take a look. All right, we presented it in fairly easy to understand form. There's notes there for questions. And of course, if you have any questions or comments, you can feel free to email us. We always put the email graphic up at the end of these market updates. But now we move over to the other column, and you're going to see this when you go visit the website. Okay, we have theoretical trade range, and the theoretical trade range is as such. Okay, that is the possible price action or unrealized gain price action, okay, from when we made a recommendation, okay, to the absolute peak, up until, obviously, September 2nd, okay? Our average from when we made a recommendation to when our recommendation topped out or peaked at, okay, is 56.017%. That's ridiculous. Okay, and I think anybody that's going to be in managed money or anybody that runs money or is in managed structured products or anything like that's going to look at that and go, how the hell did you do that? Okay, fact of the matter is 56.017%. That is taking into account, by the way, the two that we recommended in 2015, of which one was Tesla and the other one was Nordstrom, which was just a complete face plant. All right, if we had to pick the biggest loser, there it is. Thank you, John W. Nordstrom, for that. But if you exclude those two and you go just by what we made in 2016, and we could have done it for window dressing, we could have made it look all very impressive, guys. It was 58.25%. I didn't put that on the spreadsheet, but that's the number that came up. And, oh, by the way, taking into account everything, our win-loss ratio in terms of unrealized gains with theoretical price action, okay, from when we made a recommendation to when that equity went positive, where it could have been a winning trade, guys, we're 36-1. Okay, if you exclude those two made in 2015, it's 100% accuracy. From when we made a recommendation to when there was positive price action, average of which was 56.017%. Okay, at the end of the day, that ain't bad. Okay, that's a record I'm proud of. And I'll be very forward in saying that. Forgive me if I sound arrogant. But at the end of the day, guys, those are very respectable numbers. Now, that brings us to... if we take into account, once again, the two that were made in 2015, as well as, obviously, all the other ones made in 2016, Okay, our price action win loss ratio, winning trades where you could have, and we do understand these numbers favor active traders, especially these are guys that are going to watch the stuff every day and they're going to go, okay, I'm up 10% out, I'm up 20% out, okay, and that's for you guys to decide. Okay, you'll notice we don't give exit points a lot of times in our trade. Okay, because a lot of times we don't know. Okay, we'll see the trend. We have no idea how high it's going to go, but we'll go, okay, that's a trend there. And if you're taking consistent 10%, 20%, 30%, guess what? You're doing it right. If you're taking consistent 40, 50, 60%, you're really doing it right. Okay, and we do understand that not every single person out there, and probably you're selling the absolute tippity top of a range. It's not realistic. Okay, you're not going to do. With Evolution 4.0, we can get pretty close, but can we absolutely tell you the day? We've done it before. We've called equities to the dollar to the day, and there are people out there that will absolutely vouch for us and verify that. But realistically speaking, let's say even on a trade like, here's a completely ridiculous number. I almost fell out of my chair when I saw this. From when we recommended JNUG, JNUG, that's Direxion's triple leveraged junior gold miners fund, okay? From when we recommended it to the absolute peak of the most recent cycle, it was 470%. Really? Okay, 470%. Now let's be realistic about that. Did you absolutely sell the very peak? Maybe, maybe not. Okay, if you screwed it up by 50%, then you only got 200%. Okay, but these are the kind of numbers that that we were putting up, and I'm sitting here and I'm doing the spreadsheet. I'm going, how the hell did we do this? Right? So at the end of the day, take into account the two recommendations that we made in 2015, as well as obviously all the others that were made in 2016, guys, and that comes to a 97.29% positive price action level of accuracy, which means for 97% of or almost 98% of the picks that we made after we made them ended up higher than we recommended them at. Now, for the life of me, I can't remember the guy's name, but I do recall somebody during my test of concept phase. I believe the phrase was, he's full of shit, and there's no way that any system could be 96% accurate. Now, I can't remember the name of the guy that said that, but give you an idea how relevant he is. But apparently it is possible. Who knew? This guy did. Anywho, as we move along, guys, once again, I'm going to encourage everybody to go take a look at that trading record. It really just it speaks for itself. And as we see oil start to cycle up again, and I mean, especially today, I'm going to do another market update video separate of this one for the day that we just had with metals, which was just absolutely awesome. I mean, we called that one to a T, and we got the kudos and the accolades on Twitter for it, which means a lot, guys. It really does. And with that in mind, once again, this is this trading record, guys, has been the result of Evolution 4.0 operating on very limited resources, intentionally so. Okay, and as I said, that's coming to an end right about now. We're getting ready to turn the monster loose, so to speak. But this, these kind of trading numbers is a result of minimal resources, okay, and minimal CPU hardware, just minimal everything. All right, which is why I had a customer ask me recently in the messenger platform that I use, and he asked me about Evolution Ultra. He's like, when's that coming online? And I said, we got approved for the funding. We just have to build the friggin' thing now, So what is Ultra capable of? I have no idea. Okay. What's 4.0 capable of with, dramatically increased resources? I have no idea, but we're sure as hell going to find out real soon. Okay, so we're excited about that, guys. And along those lines and on that note, I would like to say very sincere thanks to everybody on Twitter that's really been kind of encouraging us along. Again, it means a lot because I have my days where I just go, what the hell do I even bother doing this for? And I keep remembering, oh, yes, Nick, there is a 10% out there that actually has their head screwed on straight and they're paddling civilization in the right direction. All right, so in addition to, self-funding and, obviously making a living doing this, the words of encouragement do mean a lot. It is a creative outlet for me sharing this information. And it's great, man. When I get emails from people going like, "Hell yeah, we're up 20%, we're up 30%." That makes I like that kind of stuff. It's like we live in a society where it's just most people can't stand a winner. That if you look around in society, you see that kind of thing. Most people can't stand a winner, and that's kind of one of those things that just drives me nuts. And I said, you know what, screw that. I said I'm here for the 10%. The other 90%. F it, you're on your own. All right, so that being said, again, thank you very much for the words of encouragement, guys. Email Questions, comments, bitches, gripes, moans, and complaints. As usual, you can save the bitches, gripes, moans, and complaints because, as you know, we do give exactly the square root of jack shit about your bitches, gripes, moans, and complaints. However, creative feedback, constructive feedback, certainly ideas for research, etc., etc. You guys are more than welcome to email us. It's info@evolutionconsulting.world. Info@evolutionconsulting.world. All right, you're more than welcome to obviously. We like hearing from you guys. We do. We enjoy it. And of course, if you want to follow us day to day, it's at Evo Consultants, at Evo_consultants. Okay. Every once in a while, we get in the mood on Twitter, and we have quite a bit of fun on there. So, again, we enjoy doing that stuff, guys. That being said, guys, as always, thanks again for the continued support, the encouragement. Please do head over to evolutionconsulting.world. By the way, switch and signal. Okay, a lot of the trades I haven't mentioned them specifically. You'll kind of notice a few of them in on the spreadsheet. But guys, switch and signal is the way to do it. Okay, and that is maybe a bit of gratuitous self-promotion, but I mean the picks that we've made in switch and signal, the narrative that we've been providing in switch and signal has been absolutely just spot on, and the reviews we're getting echo that. As a matter of fact, so we know we're doing it right. As always, guys, be good. Everything really is a transaction.